Just Tesla, the likes of Facebook, Alphabet, Amazon, Apple, all down between 4 and 6%. Charlie, you think that they're all great companies, but not great stocks. Tell us why.
Well, that in history, there are just lots of examples of this. My favorite is in 2000, where Microsoft was trading at 38 times earnings. Over the next 11 years, the earnings tripled, and the stock went down 25%. There was nothing wrong with it as a company. It was just there were a lot of things wrong with it as a stock. And that is exactly the same situation we've got with Tesla. That's exactly the same we've got, frankly, with even some great companies like Apple. They're wonderful companies that are going to grow, but you're just not worth the current stock price.
All right, we are going to keep that conversation going, and we want to dive into Tesla a little bit more. Shares tumbling today after it was left out of the S&P 500 in its latest rebalancing, despite Tesla reporting 4 straight quarters of profitability. Let's bring in Jed Dorsheimer, analyst at Canaccord Genuity, who has a hold rating on Tesla. I guess, Jed, we learned that it's not just the earnings, but perhaps the quality of earnings that matter when the committee makes a decision about what to include.
Yeah, I mean, I'm not privy to precisely what the subjectivity was in terms of them not getting in. Clearly, though, you're seeing a retracement in terms of the momentum, as a result here.
Jed, in terms of the scale of the pullback and what factors might explain it, we've had a lot of people talk about the stock split. A lot of people talk about the expectation that it was going to enter the S&P 500 and then missed out. Do you think that those sort of wild card factors, as it were, explain some of this volatility?
Yeah, I mean, as your previous guest or I think the Charlie gentleman that was mentioning, a stock split doesn't change value at all to the company. All it does is you're opening yourself up to a different cohort of investors, largely retail. So what you saw was a momentum that, was kind of perfect timing of a few things coming together and the company grabbing some cash in the process. What we're focused on, just as a fundamental analysis, is we kind of want to see what they're going to say at their Battery Day that's coming up, and then be able to vet how realistic those expectations are, and determine whether or not this pullback represents a buying opportunity or remains overvalued.
Well, what do you see as the value of this stock at present without any of those delivery targets actually having been met or announced? Do you think that having fallen 30% in 1 week for where Tesla is today is fair value?
I mean, you've seen a massive decoupling with the liquidity that's gone into the market. But to address your question head on, our price target was $325 per share prior to, the combination of all of these momentum factors that we took it up to $442. And what we're seeing is a retracement that's almost perfectly back to where that was. Now, that's probably a little less science and in terms of how I've positioned that. But again, I think what we need to see is kind of what is the next leg and how realistic that is. And I think we'll get that at the Battery Day.
Jed, thanks so much.
That also is why we encourage investors to look at the supply chain where there's greater dislocations and greater opportunities as well.
Jed, thanks so much for joining us. Much appreciated.
Thank you.
Charlie, clearly there's so much money coming out of the tech stocks today in the last couple of trading days. Are you disheartened at all that that hasn't driven any of the undervalued stocks higher, that clearly there's just money coming out across the board? The banks, for example, still down sharply today?
Well, value has outperformed growth pretty nicely here this quarter. I think our fund is outperformed by over 200 basis points, and that's a relief from the drubbing we've been taking from growth stocks. So things are better. I mean, when money comes out of the S&P, it tends to take along some casualties with it. But right now, we're encouraged that people are starting to pay attention to value, because clearly they weren't paying any attention to value for the last couple of months.